Well, I still have my guests in the studio, Bismarck Ruwane, CEO of Financial Derivatives, Kubi Momo, Chairman, City Trust Asset Management Company, and Gregory Cranston, consultant and African economics, who is joining us virtually. Thank you so much for your patience. You listened to the central bank governor. Bismarck, let me start with you. What were your two key highlights for you?
No surprises, no stories. Remains resolute, as expected, hold, and let's watch and see. And he used the word gradual 4 times. Gradual about inflation. Right? So what you see is what you get.
Kubi, what were the key highlights for you?
Two key highlights. The central bank governor said, there's a statement he made or a phrase he used.
Right.
He said the road of travel. And from what we've seen, just like Bismarck has said, no surprises. And I think if you're a foreign investor in Nigeria, you'll be very happy with what you heard today. The road of travel is clear. Not only is it clear, it's been clear for a while. The investors don't like surprises. They like to be able to plan ahead. They like to be able to make calculations, and to project where will I be in a year's time.
Right.
And with no surprises here, it tells us, and then from some hints that the governor gave, that we might be looking to cut rates at the next meeting, which is in May. So it's very deliberate. It's very well thought through. I would use strong, policy-driven and methodical. Those are the words I would use in how our central bank governor has mapped out what he wants to do, how he wants to get it done, and how he's going to drive the reforms. And we're seeing the fruit of that. And the second thing I would say is, maybe the one set of people who'll be slightly disappointed are borrowers. And then, and I think one of the questions he took addresses that in terms of, okay, so these rates are still a bit high, and that's in terms of lending rates. When will it get to our turn? And I think that was where he hinted that in future MPC meetings, we'll be looking at making those cuts.
All right.
So those are my two key
takeaways. Thank you for that. Gregory, talk to us about your two key highlights from the governor's comments.
Yes, thank you. Well, I have to agree with my fellow panelists. How many times did the governor use the expression orthodox monetary policy? I know, too many to count. But the message was quite clear, and there were quite a lot of digs at the former regime in the governor's office, a lot of digs, in fact. But what he's saying is that the orthodox monetary policy will pursue it, no, we won't flinch, and we'll make ourselves more attractive for foreign portfolio investors. I think that was a point that came up quite strongly. Another one also, which I think it wasn't said, but unspoken contrast with the former regime, the relations between the central bank and deposit money banks are improved. I mean, I think it's quite clear. And I don't think it's an exaggeration to say that under the previous regime, a lot of senior bank deposit money bank employees, whatever, may have felt that the central bank was just looking to pile on more and more fees on the banks. So much better relations there, contact with the chief compliance officers. So steady as she goes, we wait until May. And external sector also, lots of sort of positives that came out before his address, like the PMS price trend, the narrowing gap with Bureau de Change rate. Reserves are still robust. Okay, they come off the last 6 weeks, but there's still almost 10 months cover. So no great surprises, as my colleagues are saying. And we wait until 19th and 20th of May, when, all being well, we might get some monetary easing.
Right. Thank you so much for that, Gregory. Now, Bismarck, I mean, a lot of the comments were positive, macroeconomic indicators positive. The governor is convinced that the orthodox approach of the MPC has yielded a lot of results. The FX stability, balance of payment is strong, and he believes that investor confidence is perhaps at an all-time high, if I can say that. But he did also talk about the fact that he's expecting to see a better flow of FDI this year. What are your thoughts?
I think he addressed something very clearly, that first of all, let's have the process, right? Once the process is transparent, once price discovery is there, and investors see stability, right? Confidence grows. Once investor confidence improves, investor flows will improve, and that will come growth. So, and he said something again, we are consumers of data. We do not produce data. We are consumers of data. We are data-driven. Therefore, we will make our decisions, and in due course, we would respond. In other words, we would see the data, we will analyze the trend, and then, as against exogenous and endogenous risks, we'll make our decisions. But we will stay on the orthodox path. No unorthodox activity. So essentially what the central bank said and the governor was saying was that we're not going to be carried away by flash data points.
But I remember he did make a particular statement. He said the new base year and the new CPI represents the current economic reality. So
Yes.
they will be working off that data.
Yes, but I know that he had to say that, and I believe he believes in that. But like I said at the beginning, one data point is not a trend. There are so many things that you're looking at. And he talked about trade-offs. But like I said at the beginning, gradual was used 4 times. Gradual, gradual, gradual. And finally said, we begin to see sometime later a moderation in rates after we've consumed the data, analyzed it, and come up with our decisions.
Right.
So that was a typical central bank speaking.
Governor speak. Kubi, he did mention talk about the banks. He said that the bank management of banks should closely monitor the recap exercise, and to ensure, for me, the key point there was the quality of the capital that was being raised. What are your thoughts on that?
I think when he's saying that, he's thinking about maybe some of the things that have happened in the past, where recapitalization exercises, there's been an element of hot money, or people have been borrowing to recapitalize. So I think that's what we don't want to see this time around, because what tends to happen is that you see a number on paper, and then within 9 months to 1 year, some liabilities start to materialize within the entity, and it now causes greater problems down the line. So those are the kind of, central bank has been very careful in terms of what qualifies as capital, what banks can do, the kind of steps they can take to raise capital, to make sure that when we're seeing a position in the financial statement,
right,
it is backed by actual cash, that there's actual cash somewhere, and that it's fresh, a fresh injection into the system. I think that's what he's referring to. But the way he said it.
Gregory, I wanted you to speak to the point of foreign direct investment. The CBN governor seemed quite confident that with the strength of the reforms, especially in the FX market, what the MPC has been doing to encourage and to keep foreign investors in the Nigerian market. He believes that this year foreign direct investment will be significant, and that the country, or Nigeria, will be able to sustain a foreign investment interest in the country. I'd like you to speak to that point.
Yeah, thank you. Well, I think if we're talking portfolio investment, yes. If we're talking direct investment, we have to wait a bit longer, I think, because you only have to look at all these indices. I know it's easy to rubbish indices about efficiency, corruption, competitiveness, whatever. So, but portfolio investment, yes. I mean, it doesn't take a huge amount for, let's say, the prop desk of the large investment bank to pile into Nigerian securities, because they have the risk appetite. It takes a lot more to persuade a direct investor. And on the subject of direct investment, so we have to note that the trend actually is for them, but at least the large multinational companies, a lot of them are making or want to make an exit. But of course, you can have other foreign investors than big multinational companies. But the answer is portfolio investment. Yes, if they play their cards right, and the governor maintains his stance, which I'm sure very likely he's going to. Portfolio investment, yes. Direct investment, there's a bit of a long way to go.
All right, thank you so much for that, Gregory. Bismarck, I was hoping to hear more comments from the fiscal side, the MPC, the governor talking about the fiscal authorities, but he did say that he sees better collaboration this time between the monetary and fiscal authorities. And speaking to some structural issues, especially food insecurity, security around food producing areas of the country, he did say that he's confident that better security will be provided by the fiscal authorities and we'll see food inflation component declining. Are you as confident as he is?
I think what he did say really was that, okay, the fiscal authorities have two things to ensure that the money they spend actually leads to output growth and productivity. What he did not say and what he said in a nuanced manner was that the leakages in the fiscal side have to be minimized. And the role the central bank plays in ensuring fiscal coordination and discipline is to ensure that, one, they borrow at market rates, and two, the ways and means advances are not abused. Once you have that, then clearly the kind of results that he's talking about, the kind of results you are seeing now, even though slow, will begin to manifest itself. So fiscal and monetary coordination actually means ensure that leakages are blocked, ensure that productivity is what is spent is produced, quality of spending, and more than anything else, if you have to borrow, you borrow at the market. Those three things put together gives you the results that you require.
Right. Speaking about market, I wanted to talk about the FX side of things. He did, obviously still confident also about the narrowing we're seeing between the official market, the parallel market, and also emphasizing the fact that the FX code that was introduced in December was not working in isolation. It's been that in the run-up several reforms. But in terms of, and speaking to your point earlier about predictability for investors, knowing that, look, I'm coming into a market where, I can exit whenever I want, and, there's some level of predictability. What can businesses look forward to this year? That predictability, should they look forward to that? And do you have an outlook on the Naira in terms of how much stability we should continue to look forward to?
Okay, so a lot of in terms of outlook, will depend again on some factors around oil production, so that's good. In terms of where we are today, import cover, I think 9.6 months of import cover, which takes us almost to the end of 2025. Reserves, robust. I think the governor himself said that we had the highest reserves, we achieved the highest reserves.
Yeah, went over 40 billion, but right now we're just over 39 billion.
Yes, we're a little bit down. Yes, we know we're a little bit down from there. But what it means is that we have a pretty good war chest. So the central bank governor now he's used a lot of tools, which he has referred to himself in terms of orthodoxy. He has achieved results. So what do we see as the outlook? So I did a little bit of maths during the break, and I said that even if rates go back as bad as they were towards the end of 2024, we're at 1.5 in both markets, and that is a very good convergence. When you see convergence, it tells you that there are no pressures in any of the market. It means that demand and supply are in equilibrium. And one of the reasons for that, you had said before we started, what did I expect him to say? And two things, he mentioned them directly, the FX matching and the code working together. So the FX matching has very fast reporting and transparency in that, which means that if the shopping around that importers had to do, going to one bank, going to another bank, that doesn't happen as much anymore. You can stay with your bankers, you're sure your orders are being met, and you're confident that you can plan for this year. And then I was saying that if rates go back to 1.7, that will be a 13% decline from where we are today, if we even get back to those levels of last year, which is well below where interest rates are. So what it means is that if I were an FPI and I'm doing a projection and I say, okay, we go back to where we were at the end of 2024, I'm still about 1,000 basis points, which is 10 percentage points ahead in terms of my returns. And even if I take off what my returns would be, not in Naira, if I were in dollar, I still about 4%. So for investors as well, I think they should be pretty, they'll be looking positively as well at the outlook for the rest of the year.
So a bit of comfort. That is good to hear.
For investors, for importers.
Let me ask you, for domestic, for the businesses in the country, what kind of economy are they going to have this year? The fiscal authorities are they're very positive on the strength of the reforms and all that's been it's yielded so far. Monetary authorities, we've heard the CBN, we've seen all the macro indicators as they are. What kind of economy are they going to have this year?
They're going to have a stable economy. They're going to have to work hard. And when I say work hard, what I see is that you're going to pay higher tariffs for electricity, higher tariffs for telecommunication. You're going to be buying petrol and diesel at a lower cost. You're going to be buying foreign exchange at about the same rate because, quite frankly, the exchange rate is slightly undervalued. So I want to understand that, one, what we are reporting are gross external reserves, not net. Therefore, I am not going to be swayed by that number. But also, when you see we borrowed $2 billion in the diaspora bond, and we took another $2 billion in the other bond issue, right? The Euro bond. So our borrowing increased by $4 billion, and our reserves went down from 42 to 39. So we've used $8 billion to support the currency to achieve this level of stability. Can we continue to do that? I'm not so sure. But obviously, it's the signals are there that there'll be a moderation in inflation.
Right.
The signals are there that there's still a lot of work to do in terms of maintaining exchange rate stability. And it will depend on the price of oil, LNG, cocoa, and others. And so, generally speaking, it's a positive, cautiously optimistic year, 2025.
All right.
But don't get carried away.
Well, I mean, still early days. It's still early in the year. Gregory, if we could just have some closing thoughts from you as we wrap up this broadcast.
Yeah, thanks. Well, look, the meeting went as we all expected. There's no change in the four main parameters. He might have made some adjustments for the corridor, but as colleagues said, but he didn't. So we just have to be patient. Bismarck's point, a very good point about the depletion of reserves, yet heavy borrowing in Eurobond and diaspora markets. So we have to be a bit careful. But there are a lot of positive indicators, encouraging indicators. And the right thing was not to change your stance, I think.
All right. Thank you so much for that, Gregory. We appreciate your time on the show today. Well, that's all for today's coverage of Nigeria's MPC meeting. A big thank you to my guests, Bismarck Ruwane, CEO of Financial Derivatives, Kubi Momo, the chairman, City Trust Asset Management Company, and, of course, Gregory Cranston, a consultant on African economics. Thank you so much also for being a part of today's broadcast. I'm Esther Awuni from the team and I. It's bye for now.